Welcome to the Mortgage Rate Weekly Market Update for the week of July 30th, 2018. Hello, I'm John Thomas with Prime Residential Mortgage. Here's your update. Well, last week's mortgage bonds did end the week slightly lower, so mortgage rates did move slightly higher. Take a look at the bond chart on the screen. You can see the short-term trend now for mortgage bonds is to sell off. We were able to find a floor of support on Friday, very weak floor of support though. And we were able to rally off of that. You can see with the green candle there after the 4.1% GDP report came out on Friday. Bonds were able to rally off of a weak support. But as you can see, they broke below the 50-day moving average right there on the beginning of the week, which was a bad sign because we were in this trading pattern for a couple of weeks there. As you can see, I'm trying to break above the 100-day moving average. Got above it, but could not close the next day above it, so we're pushed below it. And you can see these trend lines were all converging last week at the end of the week, and then Monday we broke out, but we broke out lower, dropped below the 50-day moving average, and being trapped in this tight trading range between the 50-day moving average and this weak floor of support. Now if we break that floor of support, bad news there, we got a way to run down before we get to another solid level of support all the way down here. So that is not great news. So we're going to recommend locking your mortgage rate to start the week. Take advantage of whatever rate you got right now. The short-term trend is for mortgage rates to move higher. We don't have real strong support on the bond market right now. So go ahead and lock in your rate unless something changes. Now in the economic news, we saw the stock market rally at the end of the week last week after the United States was able to get the European Union to give concessions to the U.S. to keep from having a trade war. So the EU agreed to lower their industrial tariffs on U.S. goods that are currently in place, and they also agreed to buy more soybeans and natural gas from the United States. So that's important too because a lot of the natural gas is being bought from Russia, so if we can get them buying more from us, there's less of a tie that the European Union would have to Russia controlling some of their energy products. Now, President Trump and European Commission President Juncker agreed to work to a policy of zero tariffs trade policy and agreed not to impose any new tariffs while they're working on this policy, trying to work out getting down to zero tariffs between the European Union and the United States. So that would be total free trade if they're able to do that. Now, gross domestic product or GDP for the second quarter of 2018 surged higher to 4.1% from a first quarter reading of only 2.2%. Now that big surge was based in a big part on consumer spending, which was up 4% in the second quarter compared to only 0.5% in the first quarter of 2018. Now GDP is a broad measure of the value of all finished products and services produced in a country's border for a specific period of time and is considered the broadest measure of economic activity. So this is the highest GDP reading in a very long time. 4.1% is a great reading. 3% is healthy economy. We've been below 3% for a long time, so this spike higher to 4.1%. Very good. We'll just have to see if it can continue. So we'll keep a lookout on that. Then we saw weekly initial jobless claims come out on Thursday. Claims did move higher by 9,000 claims to 217,000 claims for the week, but they're still ridiculously low. The previous week was revised higher by 1,000 claims to 208, but 208 is still the lowest in 49 years. And we've only moved up to 217. So jobless claims, very, very low. Shows a very strong labor market. And that previous week of 208, that's going to be the sample week for the July jobs report, which comes out this Friday. So that's going to point to a very strong jobs report. That's another reason to go ahead and lock your mortgage interest rate because a very strong jobs report would not be bond friendly. Then with the total unemployment insurance benefits a person, in order to get uninsured benefits, which is this, we're measuring on the first time weekly claims, you have to have three things. You have to have lost a job through no fault of your own, so you can't quit, be able to work, available to work, and actively seeking work, and then have earned at least a certain amount of money during a base period prior to becoming unemployed. If you meet those three things, you're allowed to file for unemployment benefits. And the weekly jobless claims measures the number of new people filing for claims that week. So that's how we come up with that number. Now in the housing news, new home sales for June 2018 were released last week and they fell 5.3% from May to 631,000 units on an annualized basis. So sales for new single-family homes dropped to an 8-month low, but new home sales are still up 2.4% year over year. So still not a bad report. And the median home price for a new home sale is $302,000. So not as hot as it's been. Still doing good, but it is cooling off a little bit there for new home sales. Now, we did see existing home sales for June 2018 come out last week as well. They were down 0.6% to 5.3 million units on an annualized basis. This was lower than expectations of a gain of 0.4% in existing home sales. And existing home sales are down 2.2% year over year, and that's because of a severe lack of inventory, and also higher mortgage interest rates can make homes less affordable right now. So the median existing home sale price reported at $276,900, which is an all-time high and up 5.2% year over year. So again, that lack of inventory is pushing home prices up, but it's also muting the number of homes that are being sold. So until this inventory problem starts to get solved, we would expect to see existing home sales still suffer. So we'll keep you updated on that. Now, in the local news, we got the next free first-time homebuyer seminar Saturday, August 18th from 10 a.m. to noon. That's in Newark, Delaware at the Christiana Hilton Hotel. You can register for that event by giving us a call at 302-703-0727 or online www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.